Mm-hmm. Mm-hmm.
Woo!
Let's go.
Welcome back, traders. How are
I
we
wake up.
doing today? We have an absolutely beautiful video going over stock ticker AMC as well as GameStop and the broader market of how that affects these stocks, or at least how it's applicable, right? And I wanted to talk about something very, very important. So make sure to stay the full length of the video because we're going to look at this thing, AMC and GameStop, both on the macro chart. And kind of break down how it's applicable to the larger run that we believe is going to happen on risk on assets. If you guys are interested in this content, just make sure to slap the subscribe button and punch the like button because y'all have been doing an excellent job of that. We had 150 like ratio to 0 in our last video. So I already know y'all are taking care of business. All right. AMC, guys, is making something that could be very, very special happen right now. You have already, from the bottom of this freaking wedge, guys, like we called, from the bottom, you're already making about a 56% run up. The beauty of this, right? The beauty of this is you are now closer to the top side of this wedge, 30% away, than you are the bottom, right? I think I took that wrong. 26% away, 28 to 29. So you're right in between, right? Let's call it as it is. You're right in between this wedge. What you do next is going to determine a lot, right? You could see volume step in here and you could freaking blast through, hit this resistance, and come all the way back down, to 90 cents. That is a possibility. But traders, what is so exciting to me is that you are now beginning a possible coiling process or breakout. And in my opinion, that is the most exciting thing on this stock since probably back here, right? April of 2024. Now, I've told you how much I love the weekly MACD for two reasons, right? I'm a momentum-based trader, and this is happening on AMC right now, right? You see the momentum driven into the stock 18 and 20% in the last 2 weeks alone, right? And you see the weekly MACD freaking cross green. That's exciting, right? And when you look at the bottom that we've talked about, right? Bottom tick, bottom tick, bottom tick, bottom tick. The move that has occurred on these runs has each been about 200% or more, right? This was the exception. You were 114%. And then this was 1,000%. This one was 400%, right? And when you look at the room that you have left, you have no freaking space to see that kind of volatility here. So what are you going to do, right? Are you going to break out? Or are you going to see more consolidation that inevitably makes this breakout so much juicier? What I'm watching here is what we talked about so many different times, right? This is a broader market falling wedge. Always has been, right? Ever since you slapped down here, we were looking for a thesis. We were looking for something to follow on this stock. And this resistance dates back all the way to June from that squeeze. 2021, you see the rejection candles here. Rejection, 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 right? And you're finally finding support. And that's what's genuinely encouraging because not only do you have the support, but you have the weekly MACD cross. Now, what did you see from your last cross? That was about a year ago, guys. About a year ago, you saw this thing cross green, pretty much marked your bottom, and you ran 69%. That is genuinely exciting stuff, right? When you talk about AMC, that is so, so awesome. But looking at the shorter time frames, right, there is reason to believe that you might see a little bit more of a short-term pop before a drawdown. And I believe that because you're about to get your 9-day EMA cross through the 50s, showing that the short-term trend is stronger than the medium-term trend, right? Your short-term momentum is going to build you higher, in my opinion, upwards of this $170 to $2 territory. If you're able to do that, traders, some boom boom candles are on their way. Some freaking absolutely crazy candles are on their way. The one thing I'm watching here, though, is the volume profile, right? You see on the daily time frame, you're seeing lessening volume while you grind up slowly here. That is a tad bit bearish, although you have a gap sitting at 112 as well as 128. So that's what I'm watching from the bear side scenario. But from the bull side, right, you look at the last time you saw this cross on AMC, the 9 through the 50. We need a name for it. I don't know if anyone can make a name for it. But this was a little bit of a flirt cross, right? You had a fake out here that brought you back-to-back green days, about 8% gain. This was a cross a little bit greater in value on AMC. You came back and you retested it, and then you shot up 16%. And then this was as well a pretty significant cross, right? You came down, you tested it, and then you saw that 40% run up. So that's what we're watching here on the short-term trend. We're watching the 9-day and the 50. What are you going to do? Are you going to see volume step in here and take you higher before you retrace or consolidate? The major horizontal resistance I'm watching right now is currently this 178 to 180 territory for two reasons, right? That is your previous high in this run-up phase before you created your falling wedge. It only makes sense to me now that you're above the daily 50 that you would return to that point in resistance. Secondly, right, you have the opportunity to make a pretty nasty inverted head and shoulders here. If you come all the way up to, 178, and then you come all the way back down to where we're currently at, 140, right? And then, right, history will be history. We'll see what happens. But this is where you had that U-shape shoulder accumulative structure, right? And then you saw a deep head, and then you could potentially, right, see that U shape, and then that deep shoulder take you higher. And the profit target from that, traders, would be freaking insane. It would be upwards of $3, which seems insane, right? Just when you're talking about legs up and the gains that would come from that. You're talking already a 217% rally from the bottom, which bears would get absolutely fried. This is a possibility in AMC. I'm not going to count it out yet, and I'm not going to count out your weekly MACD cross, because when this has happened, traders, historically, AMC is booming, right? To just say a couple words, you have still 19% short interest. You are up, right, from the bottom 60%. You just got your weekly MACD cross, and you have earnings right around May 6th. That's going to be huge to see what happens. That's going to be humongous to see if you can actually pull a much better expected result because of the blockbuster hits that have been coming to the market. Seeing the momentum in visitation, guys. Say it with me. Cost cutting, top line expansion. This is what AMC has to do in order to see profitability. So that's looking beautiful. It's looking absolutely beautiful. Next, I wanted to talk about the quarterly MACD, guys. The quarterly MACD. Look at where you are. Oh, God. Look at where you are, traders. Look at where you are, traders. I'm not a hype man. I'm not trying to get you hyped, but AMC has not looked this good in a very long time. I want to make sure you guys can feel the excitement that is brewing alongside me, right? Last time you saw a green flip of the MACD. Now, TradingView, I will be transparent. TradingView is showing a cross already. Webull is not, right? You go to the quarterly time frame on Webull, you were ever so close, waiting for a cross on this thing. But the last time you got this cross, you saw a 400% quarterly 400% candle, as well as 455% candle, right? You're now seeing this falling wedge potentially come to a halt. An AMC potentially bottom here and or start the beginning process of a coiling bottom in this falling wedge. You are literal months away from seeing this occur, right? Whether or not this happens or this thing just goes bankrupt, which I strongly disbelieve, right? I do not believe this thing's going to knife to 42 cents and go bankrupt. I do believe that you're going to see a breakout here and potentially, right, come all the way back up to your previous all-time low of $10. What you do after that, No idea, right? Because there's so many different scenarios. There are so many different scenarios once you get to that point. Not only do you have multiple gaps, one currently sitting at $13, $19, $43, right? Those are all possible gap fill price targets, depending on your own due diligence, right? But what I am sure about is if you can hold this momentum, traders, just look at where you are on the charts. If you were thinking back to a month ago not even a month ago, 2 weeks ago in March, when I was screaming from the top of the hills, look at AMC, look at AMC, something is going to happen. And now look at us now. Things, like I said, the best is yet to come. This thing was a beach ball submerged underwater. It has now made a 50% rally to anyone shorting down here is cooked. They're stupid. And you're now seeing bullish momentum begin to hesitate at a key resistance area, but this thing is about to get a cross. What's going to matter the most, though, like I said, is whether or not you can get back above the 200, because the 200-day EMA sitting at 210 and still falling down, right? That, I imagine, lining up pretty perfectly with this resistance trend, wherever it was. This one. This original OG trend line that we were looking at, back here and back here and back here, right? What you do when you cross that is going to be very telling, because of whether or not you're able to hold this, right, or reject, is going to tell me a lot about what AMC is about to do in the next 6 months. So make sure, slap the subscribe button, tune in, because we're going to be covering that every single day. But yeah, AMC looks nasty, guys. On to GameStop, because GameStop also, too, looks freaking nasty. I do believe you're going to see some kind of macro move here. It's just a matter of when, right? You've seen so much chop, so much, so little volatility, to be honest with you. And I think the whole broader market is waiting for GameStop to deploy its cash position. Now you're sitting and you're watching this thing trade sideways for upwards of a year almost, right? And this year has been very telling to see a potential formation, right? Not only did you have this falling wedge that you broke out of and you saw a nice size move, you're now consolidating after that breakout. That has me wondering what this broader structure is. Well, it looks a lot to me like an inverted head and shoulders, right? You have this chop, this run up, dump, that's your head, that's your shoulder. And now I'm expecting this shoulder base, depending on how symmetrical this is, right? You saw a 85-day consolidation. You're very close, traders. You're about 2 weeks, right? What is that? 1, 2. Yeah, you're about a week or two away from seeing this move up to $28. Now, if you see that move up to $28, it's very possible here that you see a flag out and then a higher move, because of the fact, traders, that this inverted head and shoulders would be complete, right? You've seen this flag, maybe cup and handle, and then go higher, and you're finally done with this silly goose, this silly consolidation period, right? As you look at this shoulder, head, right shoulder, the profit target from that would be the head to the neckline on top of the neckline, which takes us upwards of $38, guys. Now, we know, if you've been watching GameStop for a while now, we know anytime you get above this $28 point of control, the candles are boom, boom candles, right? We know this. You can look in the weekly here. This was $28. You saw lots of rejection, and then a 16% 1 week candle and a blow off top. Same thing happened here, right? Same thing happened here. You saw so much rejection here. One little blip and then back down. And then same thing happened on these candles, right? Boom. Boom, right? Volatility steps in as soon as you get back above the point of control on the stock. So what am I expecting? There's a possibility, right, that once you have this play out, if that is in fact the formation that's going to get you out of this structure, right? That you go all the way up. That you go all the way up to $44, $45, $46, and you tap this previous resistance trend that you tapped 1, 2, 3, 4, 5, 6, could be potentially your 7th tap of this upsloping resistance, right? Or zooming out, right? Could be your tap of this newfound resistance from the January squeeze, the May squeeze, and then now this squeeze that would take you right around $42 to $40, depending on where you hit it, right? Nothing's guaranteed, nothing's given, but the nastiness of the setup is definitely there. And the more you zoom out, traders, the more it looks like an even bigger shoulder, head, shoulder, right? So not everything's symmetrical, right? This shoulder, I acknowledge, is much smaller, but there's definitely a structure there. And the way you're seeing this stock base at significantly higher valuation or higher fundamental capabilities, right? You have so much more cash to deploy here now and much more interest in terms of institutional ownership and Michael J. Burry. Dude cannot get enough of the stock, and I love it, right? He literally just bought more the other week and is continuously updating his post thesis. In fact, the last thing he said was he believes if there's a market crash broad, right, a larger market crash, that GameStop has a unique opportunity to deploy itself that many other stocks do not have, right? And this opportunity would allow for GameStop to reinvent the business case. That's a beautiful thing, right? That's a beautiful, beautiful position to be in. So I am not worried. I am not sweating about this stock whatsoever. I'm sure in the end, traders, we will make it out just fine. On the daily chart, we'll just give you a short-term analysis update as well. You made a beautiful Friday close, traders. You had a hammer candle, a long-wicked bullish hammer candle that closed directly underneath your 50-day EMA. You can't make it up, right? You closed 1 penny underneath your 50-day EMA, currently sitting at 23.23. Your close was 23.22. This is still bullish in my opinion, right? The fact that you came all the way back down within this wedge formation of this right shoulder and you stayed within this uptrend, right? Those are two good things. Now we're watching and very, very closely watching, can this resistance or support trend hold? Otherwise, you're going down to these gap fills currently sitting at 21.25 and 21.93. If you can avoid that, I would totally be so happy. I would be freaking over the moon, right? But that's what it's looking like on GME right now, because you need to find some kind of breakout. You need to find some kind of distinctive volume to decide whether or not you're going higher or lower. But as of right now, you had a phenomenal close on the day and a pretty indecisive close in the week. So that's what we're watching for on GameStop on IWM, baby. You saw a beautiful weekly close, seeing one of the best weeks in a long time, up 4% on the market, and about to get that MACD cross on the weekly as well. One thing I'm watching for on IWM for this broader market rally is the volume is so poor here. So I would not be surprised in the slightest, traders, and this will sway what I think you're going to do next week. If you see a volume spike for the Bears and this rejection, that is not a good sign, right? You want to see this thing see bullish volume break and for a breakout to ensue, right? And you want to see the previous all-time high get smashed. That is going to be key to watch this thing go to all-time highs and to watch AMC and GameStop to continue to rally. If you don't see that, right, it's very, very possible that you see this consolidation that you've done on top of this breakout come to an end, and for you to fail to hold the 9-day EMA and then come all the way back to fill this gap currently sitting at 253. I'm assuming if that is the case that something would have happened with fundamental news, like within the war and the market. So stay tuned to that. Unfortunately, that's what we're dealing with. So There is a very, very clear volume trend exhaustion on the daily time frame. So that's what we're watching for this swing up. If you cannot hold and you see bear step in here, it's very likely that you return to the 200-day EMA, currently sitting at 243, traders. So that is our technical analysis for the day, right? Not the week, thank God, for the day. If I could ask you guys to do anything else, it would just be please, please, please subscribe. Hit the notification bell because we are going to be here every single day talking about either AMC, GameStop, or Neo. And please have a wonderful rest of your day. God bless. And remember, the best is yet to come. Peace.